But the other couple of stocks which are buzzing around or are in focus are the Jindal Stainless group of stocks, because we had an announcement that came by yesterday. The boards of both Jindal Stainless Hisar as well as Jindal Stainless have approved or announced a merger. And post the merger, remember, this will be the 10th largest stainless steel company in the world. To understand the rationale behind this and the way forward, we have the company's Group CFO, Anurag Mantri, joining us now. Thanks a lot, Anurag, for joining in. First up, if you could explain to our viewers what exactly was the rationale behind this, primarily because it was just a couple of years ago when you had done the entire demerger exercise, and now why this remerger exercise?
So let me, Nigel, on the factually, the demerger was done actually in 2014. So it's almost 6 years. And at that time, obviously, the Odisha plant was not at the full capacity utilization. So idea was to how to de-risk the existing business with the ramp-up phase of the business, because it was a greenfield expansion. Now, having said that, I think we have really turned around the Odisha plant in JSL, and it's now, in fact, we have debottlenecked to increase the capacity by 35% last year with just 40 crore of capex. So it's a state-of-art plant. So now it's running at a good capacity utilization. We came out from CDR. We actually were one of the most successful CDR exit in the recent years. So March, we completed our CDR exit just before pandemic. After that, there was a series of lockdown and all this thing. Then again, we actually made a good recovery because based on our various cost efficiency measures which we have taken during CDR, which are now repaying us in terms of our profitability and margins. So now we see is a good time to, in fact, after seeing the good quarter two recovery, to consolidate the business and have one single listed entity which will unlock the value for all the stakeholders.
Okay.
Which includes obviously the lenders as well as the shareholders, because both the companies have their own different strength. Odisha, JSL.
Mr. Mantri, yes, I do get your point. So since you're saying it will create synergies, what kind of synergies are you expecting in terms of revenues, margins, and profitability as a whole? What will the combined entity look like?
See, revenue side, the combined entity will be approximate 20,000 crore plus turnover. We see going forward. I think that's one big thing. The EBITDA will be over and about 2,000 crore plus, which we should expect from this combined entity. The leverage ratio will be, balance sheet will be comparatively much stronger. It will eliminate the cross holding as well as the intercompany balances. Considering this, the debt equity will be less than 1. And the debt EBITDA will be surely less than 2.5. So which will actually a big boost in terms of overall our credit worthiness, which becoming one strong balance sheet, one listed entity from shareholders perspective, no intercompany holdings, no intercompany balances. So it will be a very simplified structure to going forward. And because Odisha has a very good backward integration, and JSHL, the company which is getting amalgamated, has a very good forward integration.
We get that point.
The various downstream play niche SS products.
We take that point, Mr. Mantri. The numbers that you're talking about, combined revenue, combined EBITDA, as well as the combined debt that you will have, will flash for all our viewers on the screen. But that is just a pro forma combined number that you're talking about between both the companies. What we're trying to get at is, what are these cost synergies, operational synergies that you're working at? I mean, the combined EBITDA for both the companies would be close to around 2,000 crores odd. But would you realize any synergies? How much would those synergies be, say 200 crores, 300 crores in terms of cost savings, as well as some sort of purchase agreements that you would have as a combined entity?
There would be a great synergies, as you rightly, because economies of scale will bring obviously the synergies across the board in all the functions, which include the sourcing, the combined sourcing strategies.
Could you put a number to that? Mr. Mantri?
It's I would say, Nigel, it's a bit early to put a number, but I think let's see, because we are still in the process as we go forward. I think it's a bit early because we just announced. I think give us some time when we work.
So how long before this thing gets done? How long before this thing gets done?
See, give us, I think, 6 months time to see, and surely we will be able to reflect a good amount of number in terms of our EBITDA side. I'm very hopeful that the combined entity EBITDA should look much stronger than the individual entities EBITDA.
Okay. And Mr. Mantri, what happens to your other businesses? For instance, JSL Lifestyle Limited, will you keep them? Will you sell them? What are the plans there?
See, lifestyle business, what we are doing, also taking in this scheme, we are actually demerging the lifestyle into two parts. The railway business, which was actually being done, there was some sort of duplication and overlapping with the sales team, productions as well as. So we are bringing it into the main parent company, and we are creating a lifestyle. We are living as a pure retail play. So going forward, it will be a primarily focusing on infra, retail, kitchens, tablewares, OEM business, and I think we need to. It will be still. We would still like to take this entity to a good substantial level before we actually go to the market for this entity. But I think it's still 2 to 3 years away. We would like to create much larger value in this entity before we actually take this to the valuation.
All right, we get that point. Also, a little about your debt. The net debt will be close to around 4750 odd crores as per the presentation that you've given. The last time you spoke to us from your vantage point as the CFO of Jindal Stainless, you said you are looking to reduce the cost of debt from close to 11.5 to 11% now. Now that these entities will be consolidated, you're saying that the balance sheet would look much stronger. Would the cost of funding come down? If yes, how much by?
Surely, I think what we expect is that going forward, in fact, even during this time, we continue to repay. So we expect to have two sort of debt interest reduction. One is from the larger repayment, which we will be achieving in this financial year.
How much?
So we are expecting the year to close, combined entity year to close by close to 3500 crore of debt. So close to 1200 crore reduction in between these two entities, if we look at combinedly. Maybe 600 crore almost scheduled repayment, and we are also targeting some of the prepayments of the debt with the stronger balance sheet.
Okay.
So close to 1200 crore reduction, which we are expecting in this financial year. If I look at the both companies' pro forma number, as you mentioned.
Okay,
And,
Mr. Mantri. Mr. Mantri, can you?
Will be on obviously interest rate reduction. So. Obviously, it will be less than 11 what we are targeting now. So we should expect a good interest rate reduction as well as the net debt reduction by the end of this year.
And Mr. Mantri, if you can give us a number on combined volumes of both the entities and the capacity utilization levels after the merger.
See, combined volume this year, obviously Q1 was low, very bad in terms of the capacity utilization. So basically 9 months and all this thing put together, the Q3 number, I think combinedly we should be able to clock almost 1.3 million ton plus, around 1.3 million ton between the two entities.
All right, Mr. Mantri, thanks a lot for stopping by and giving us all those details. Wish you good luck for this consolidation, and hopefully we can speak to you after 6 months where you will have more clarity with regards to the cost savings and the other parameters that you are understandably unable to talk about right now. So that's about Jindal Stainless as well as Jindal Stainless Hisar. Remember, Jindal Stainless is falling a little more than Jindal Stainless Hisar. That's primarily because the merger ratio is in favor of Jindal Stainless Hisar. But we've been recapping